Hello everyone. Welcome to third class of past paper revision sessions for Advanced Taxation exam. I hope you all remember that in previous two classes, we have already discussed question number 1 and question number 2 of December 2023 exam attempt. In our today's class, we'll be discussing question number 3, which is the last question of this exam paper. In these past paper revision sessions, we are discussing complete exam papers of Advanced Taxation exam. And we'll be covering 5 complete attempt papers, and then I'll be giving you 3 mock exams to attempt on your own and send me for marking and feedback. As highlighted in previous two classes also, that these past paper revision sessions hold a very crucial importance in a student's preparation for an examination like Advanced Taxation. It gives a student an insight that how a student will have to deal with all of the topics together in his actual examination. So we have already covered the first two questions of December 2023 exam paper, which is the first paper of these past paper revision sessions. So in our today's class, we'll be discussing this question number 3, and with that, our first paper of these past paper revision sessions will be completed. You all know my approach, as we have followed that approach in the first two classes also. That first I read the complete question, we discuss the answer points which we have to include in the answer, and then I actually draft the complete answer during the class. Like we have drafted these complete answer during the previous two classes, which were question number 1 and question number 2 of December 23 attempt. And I always say to my students that it's very easy for me to just discuss the answer and read the examiner answer with the students. But that will never give a student an idea that how a student has to actually draft the answer. So when I type the answer, when I actually draft the answer during the class, it may take some extra time, but that's very important to give a student an idea and a confidence that, okay, how he has to actually write the answer in his examination. So your patience and concentration will be very important while we discuss this question number 3 of December 23 attempt. Let's start with this question. I want you all to listen to me very carefully. You should assume that today's date is 1st December 2023. Pinto has requested advice on the following: his tax residence status for the tax year 23-24, the capital gain tax implications of selling his house, and the UK tax implications of receiving overseas income. The following exhibit available on the left-hand side of the screen provides information relevant to the question. Exhibit 1, Pinto. The information should be used to answer the question requirements within your chosen response option. See, first time reading of the question is very important. You just have to read it with patience. You try to identify maximum possible data and the topics which you have to use in your answer. But obviously, while doing first time reading, you don't understand the question too much. But obviously, still it has some importance because you're able to identify the topics. Because when you are answering the question, you remember that first time reading that, okay, I have read that issue in that particular exhibit. So while reading the question for the first time, read it with patience. Don't rush. Don't jump to any conclusions that the question is easy or difficult. I always say to my students that every question is easy. It's just how you approach the question. Okay. So we have just read the introduction of this question, which just gives us a brief overview that what this question is about. And the response options we have to use, there are two response options. One is word processor and other is spreadsheet. I've already told you that we normally answer a question in the word processor. We type here, and wherever we have to do calculation, we use the tables. You can also use the spreadsheet for calculation purposes, but I don't recommend it to my students. I always say that it's better to solve your question in the single screen. Okay, but if someone want to use a spreadsheet also, that's completely acceptable. Okay, let's look at this question, and while we'll be answering the question, you'll have more idea that how you have to use the response option. Now, exhibit 1, Pinto. Pinto is domiciled in UK. Pinto is neither married nor in a civil partnership and has no children. Traveled to the country of Asia. Pinto has always been tax resident in the UK until on 1st May 2021 he left to travel and work part-time in the country of Asia. Visited the UK for only 2 weeks in each of the tax year 21-22 and 22-23. such that he was not a tax resident in either of the tax years. So in 21-22 and 22-23, Pinto was a non-UK resident, and that's straightforward written in the question. Okay, so he was non-resident for these 2 years, except that he has always been tax resident in UK. Now return to the UK, Pinto. Pinto will return to UK on 20th December 2023, where he intends to remain permanently. Will live with his sister following his return to the UK. Will work part time from 1st March 2024 until 5th April 2024. So for 23-24, we need to look at his residence status. The question has clearly told us that in 21-22 and 22-23, he is not a UK resident. But for 23-24, when he returned in the month of December and till 5th April 2024, we need to look at his residence status. And that will be one of the requirement of the question. Okay, so obviously we'll look at his UK ties, and I hope you all remember the topic of determination of UK residency. If someone has forgotten, just go to summary notes, these lifesaver documents, write determination of residency, and here come all of the rules in relation to determination of residency. Okay, coming back to the question, since we are reading it for the first time, so we'll come back each of the topic in detail. Okay, sale of UK house. On 30th April 2022, Pinto sold his UK house. There was an excess of proceeds over cost of £47,000. So excess of proceeds over cost. In other words, it's a chargeable gain. So he had a gain of £47,000. Pinto bought the house on 1st May 2017, and he lived in it himself from 1st May 17 to 30th April 2021 for 48 months. Pinto let the house to tenants from 1st May 21 until the sale on 30th April 22, 12 months. Pinto did not own any other property in the period from 1st May 17 to 30th April 22, the 60 months period. So apparently he's referring about private residence relief because he had actually lived in the house also. He didn't have any other property during that period. So you need to remember the rules of private residence relief. And along with that, you need to remember that during the period he had been non-resident also. Like if I talk about he lived in the property till 30th April 21. So till 6th April 21, that's tax year of 2021. But after 6th April, it's 21-22. And in 21-22, he was a non-resident. So if you remember the rules of private residence relief, the exemption periods of private residence relief are only available if an individual is UK resident in that particular tax year or is at least spent 90 days in the property. So I hope you all remember the private residence reliefs for overseas residents, for non-UK residents. Again, if you have forgotten any rules, just go and write private residence relief and you will got all the rules relating to private residence relief. And obviously, if non-UK resident individuals, like he was becoming non-UK resident for part of the year, then PRR is available, but for period of occupation, it is necessary that that individual or his spouse should be UK resident or live for at least 90 days in that property. See, remembering the rules, that's very important in advanced taxation. Now, when we'll be coming back and attempting this requirement, you will get more idea about it. Currently, we are just reading the question for the first time. Pinto's income for the tax year 24-25. On 6 April 2024, Pinto will incorporate a new company, Fawa Limited. Pinto will take a salary of £10,000 and dividends of £2,500 from Fawa Limited in the tax year 24-25. Pinto's only other source of income in the tax year 24-25 will be rental income from his house in Vishya, overseas rental income. Pinto acquired a house in Vishya on 1st June 22. Pinto will rent out this house from 1st May 24. In the tax year 24-25, Pinto will receive rental income of £8,375 after allowable expenses but before deduction of Vishian tax. So he will be having overseas income. The tax system in the country of Vishya is that rate of tax on the property in Vishya is 16%. There is no double taxation treaty. See, when there is no double taxation treaty, in that case, the double tax relief is lower of two things, UK tax and overseas tax. Now, here the students get confused. So, if there is no double tax treaty, then why double tax relief is available? See, double taxation relief is available always if the treaty the agreement will exist, then the relief will be as per the treaty. And if there is no treaty, no agreement, then the UK tax department allows you double taxation relief at lower of two things. And that's UK tax and overseas tax. Okay. I hope you all remember the rules relating to double taxation relief. Let's look at the requirements. You should assume that today's date is 1st December 2023. Assuming that Pinto does not satisfy any of the automatic tests in relation to the tax residence, explain whether or not he will be resident in the UK for the tax year 23-24. You should not consider the split year rules, which means that you have to follow the normal rules. Now, if automatic tests are not getting applied, in order to determine the residency, we have to use the UK ties. I hope you all remember. So we have to answer this requirement for 5 marks. Then there is a requirement of 7, 8 marks, and then the last is professional skill marks. Since it's section B question 2 and 3, so there are no marks for communication. There are marks for analysis and evaluation, commercial acumen, and skepticism. So what you need to make sure is that you analyze the rules in detail, you relate it to the scenario, where possible, if any commercial relation can be developed, you have to do that. But as I told you in the previous two questions also, that when we talk about advanced taxation exam, these requirements are automatically satisfied because whenever we answer anything, we do write the footnotes, we do relate it to the scenario. Okay, so let's look at the requirement A. Now let's coming back to the word processor document where we have to answer it. The question name is Pinto, and this is our first requirement. I want you all to listen to me carefully. Okay, so now we have to answer this requirement assuming that Pinto does not satisfy any of the automatic tests in relation to tax residence. Explain whether or not he will be resident in the UK for the tax purposes in the tax year 23-24. So we have to use the concept of UK ties in order to determine his residency status. So here is the detail in relation to the Pinto that how he has been non-UK resident in the 2 years, then he returned into December 2023. So let's look at this detail and draft the answer to it. Okay, let's look at it. Now, if we read about Pinto one more time, Pinto is domiciled in UK. Pinto is neither married nor in a civil partnership and has no children. So if we talk about the UK ties, he will not have a tie in relation to close family because he is not married, nor he is in civil partnership, nor he has any children. Travel to the country of Vishya, has always been tax resident in UK until 1st May 2021. He left to travel and work part-time in the country of Vishya. Visited the UK only for 2 weeks in each of the tax year 21-22 and 22-23, such that he was not resident in the UK in either of these tax years. So he was non-resident for the previous two tax years. But if you remember the concept of UK ties, we look at the columns of previously resident and not previously resident. Previously resident is an individual who has been UK resident for any of the tax year in previous three tax years. Now he was non-resident in the previous two, but he was resident in any of the previous three tax year, which was the third year if we go behind. So his column will be of previously resident. Just wait and listen to me carefully. I'll repeat the things again also. Now return to the UK. Pinto will return to UK on 20th December 2023, where he intends to remain permanently. Will live with his sister following his return to the UK. Will work part-time in UK from 1st March 2024 until 5th April 2024. Okay. Now, first of all, you go to the tax rate sheets. In the tax tables, in the examination, it will be available to you. In the tax rate sheet, in the tax tables, you go and look at the column of residence status. Okay. Now, these tax tables will be given in the examination. This tax table provided in the practice platform currently is not the updated tax rate sheet. Okay. But the residence status table is updated. Okay. Rest other numbers are not updated, like these are the previous tax year numbers because this was a past paper question. The examiner has stated that he has updated it for the current exam year. Okay, like it was written here that it's updated for the tax year 23-24, which is the tax year applicable for the exams in June 24 attempt. But the tax rate sheet, they have missed out in updation. But still the column of residence status is updated. Obviously in the examination, The text table you will be getting will be the updated one. Okay. Now, listen to me. What you need to understand is that Pinto has been non-resident in the previous two tax years. But for the column of previously resident, we look at the residence status of residency in any of the previous three tax years. So he was non-resident in the previous two, but still he was resident in the third one. Because if you read the question carefully, it was written here that he has always been resident. So if I'll go back and look at the previous three tax years, in the previous two he was non-resident, but in the third one he will be a UK resident. So his column will be this one, previously resident. Now you will look at this column. Now we have to look at the number of days he will be living in UK. He will return to UK on 20th December 2023. Now count the days. From 20th December 2023, 20th January, 20th February, 20th March. These make it 90 days, and then 20th March to 5th of April. The tax year ends on 5th of April. So 15 more days. Let me repeat it again. 20th December 2023, 1 month 20th Jan, second month 20th Feb, third month 20th March. So 3 months means 90 days. And then from 20th March to 5th of April, the tax year ends on 5th of April. So 90 days plus 15, that's around 105 days. So almost he will be living in UK in the tax year 23-24 for 105 days. Go in the tax table, in the column of previously resident, 105 days, 91 to 120 days, he will be resident if he has at least 2 UK ties. Okay, just listen to me carefully with patience. Believe me, everything will be clear. Okay, if automatic test of residency will not be applicable or will not be satisfied by Pinto, then his UK residency status will be determined through evaluation of his UK ties. Okay, assuming that Pinto does not satisfy any of the automatic test, we have to explain his residency status. So if automatic tests of residency will not be satisfied by Pinto, then his UK residency status will be determined through evaluation of UK ties. Okay. Now, as Pinto has been previously resident in tax year in evaluation of tax year 23-24. Therefore, considering his planned number of days in UK in 2023-24, which are 105 days, he need to satisfy at least 2 UK ties in order to become UK resident. Okay, Pinto will be considered as previously resident in UK as he had been resident for at least 1 year in previous 3 tax years. Okay, see, let me repeat it again so that you can understand the thing. If automatic test of residency will not be satisfied by Pinto as it was stated in the requirement, then his UK residency status will be determined through evaluation of UK ties. Okay, you can write here also then his UK residency status for tax year 2023-24 will be determined through evaluation of his UK ties as Pinto has been previously resident. Now, how do you know about this previously resident? Previously resident means resident in any of the tax year in previous 3 years. Okay, so if you go and look at the scenario, he was non-resident in 21-22 and 22-23. So that's previous 2 years. But if I'll go back previous 3 years, he was a resident in the third year. Because earlier, he had always been resident in UK. Okay, so now, as Pinto had been previously resident in evaluation of tax year 23-24, therefore considering his planned number of days in UK in 23-24, which are 105 days. Now, how these are 105 days? 20th December 2023 to 5th April 2024. It's not necessary to write it in bracket because it was written in the question that these many dates he will be living in the UK. So you can directly write 105 days also. But for your clarity, I'm writing it in bracket. If you write, it's good. If you don't write this date, then also it's acceptable. He needs to satisfy at least 2 UK ties. How did you know this? Since the column is previously resident, he had been resident for any of the previous 3 tax years, and he planned to live for 105 days. So he will be resident if he had at least 2 UK ties. Okay. So you need to satisfy at least 2 UK ties in order to become UK resident. Pinto will be considered as previously resident in UK as he had been resident for at least 1 year in previous 3 tax years. Now, his evaluation of UK ties will be, now let's evaluate his UK ties. Close family member, UK residency tie is not satisfied, as none of the close family member, spouse or children of less than 18 years of age are resident in UK. Close family member residency tie is not satisfied as none of the close family member are resident in UK. Okay, none of the close family member of Pinto is UK resident. Sir, his sister is UK resident. See, it's not about your sister. Like he will live with his sister, but sister is not the close family member. You can just go and look at the determination of residency rules. Okay, it includes spouse and your children. Determination of UK residency. Okay, so when we talk about the close family member tie, it's a spouse or children under the age of 18 years. Okay, so close family member tie is not satisfied. Now, second tie is accommodation. Accommodation tie is satisfied as accommodation is available to Pinto of his sister. Okay, now accommodation can be your own also, or it can be of close relative also, if you remember. Accommodation available in UK either of own or of close relative. Okay, and the accommodation should be available for at least 91 days. So obviously his sister has a house and he will be living in that accommodation for around 105 days when he will be returning to UK. So obviously the accommodation is available. This accommodation is available for more than 90 days to Pinto. More than 90 days means at least 91 days, like at least 1 day greater than 90. Okay. Then the third tie is work tie. Work tie is satisfied or not. He will be working in UK from 1st March 2024 until 5th of April. So that will be 35 days. For work tie, you need to work for at least 40 days in UK. If you remember, work for at least 40 days in UK. So, work tie is not satisfied as Pinto will work for less than 40 days in UK in tax year 2023-24. Then, days in UK tie will also not be satisfied as Pinto will not spend at least 90 days in UK in either of the previous 2 tax years. See, for days in UK tie, you need to spend at least 90 days in any of the previous 2 tax years. Okay, so you haven't lived 90 days in any of the previous 2 tax years. And lastly, comparative days tie will also not be satisfied as his days in UK will not be greater than any other country. Okay, he will only live for 105 days in UK, which means greater days will be in country of Vishya. Okay, Considering the above evaluation, Pinto will only satisfy one UK type in tax year 2023-24. Therefore, he will be considered as non-UK resident in tax year 2023-24 because he had to satisfy at least two UK ties. Okay, let me repeat it again. See, if you are good at the concept of determination of UK residency, this requirement is not difficult. But normally the students struggle in this topic. Okay. See, if the automatic test will not be satisfied, as the question clearly stated that he will not satisfy any of the automatic tests, so we have to look at the UK ties concept. Okay. Now, Pinto has been previously resident because he has been resident in any of the previous three tax years. Yes. He was non-resident in the previous two, but in the third one, he was UK resident because the question clearly stated that he had always been UK resident. So, he was previously resident. You have to go to the text table that will be given in the examination. Obviously, the text table in your examination will be the updated one. So, you need to satisfy at least two UK ties to become a UK resident. Okay. Now, Pinto will be considered as previously resident in UK as he had been resident for at least 1 year in the previous three tax years. Close family tie is not satisfied because he don't have a close family. It was clearly written in the question that he isn't married, nor in civil partnership, nor have any children. Okay. Accommodation tie is satisfied because accommodation is available and that is of his sister. Close family, the close relative accommodation is acceptable. Work tie is not satisfied. Days in UK tie is not satisfied. Comparative data is also not satisfied. See, in close family member tie, it's spouse or children only. But in accommodation, close relatives are also acceptable. Okay. In close family, it's just spouse or children. But in accommodation, close relatives are also acceptable. So yes, here close relative was acceptable. His sister will be close relative. Since only one tie is satisfied, so Pinto will be considered as non-resident in the tax year 23-24. I believe that it's clear. Okay. Let's look at second requirement, which is a 7 marks one. Explain by reference to the tax residence status why the sale of his house in UK on 30th April 2022 will have been subject to capital gain tax and calculate the chargeable gain arising. You should include any explanation of the reliefs available for 7 marks. So now here we have to refer the private residence relief rules and everything. So let's look at it. And it will also be an easy one if you are good at the rules of private residence relief. Okay, let's look at it. Okay, let's go and read the relevant data. Here is that sale of UK house. So let's go and read the relevant data and then draft its answer. Okay, so let's read about it. Sale of his UK house. On 30th April 2022, Pinto sold his UK house. There was an excess of proceeds over cost of £47,000. Pinto bought the house on 1st May 2017 and he lived in it himself from 1st May 2017 to 30th April 2021. So he did an actual period of occupation of 48 months. Pinto let the house to tenants from 1st May 2021 until its sale on 30th April 2022 for 12 months. Pinto did not own any other property in the period from 1st May 2017 to 30th April 2022, which was the total ownership of 60 months. Now, if you look at it carefully, this was sold on 30th April 2022, which is tax year of 22-23. And in the tax year 22-23, Pinto was a non-UK resident. Now you must be thinking that, sir, do non-UK residents have to pay UK CGT? Yes, they have to pay normal UK CGT when we talk about UK residential properties. I hope you all remember that after 6th April 2015, after 6th April 2015, UK residential properties are subject to normal UK CGT for non-residents also. So yes, this house was sold when Pinto was non-UK resident. But since this was a UK residential property, it was a UK house and it is being disposed after 6th April 2015. So normal UK CGT will be arising on it. Okay. Now there will be issues relating to private residence relief. For private residence relief, you need to remember that PRR is only available on the periods in which Pinto himself or his spouse. Now he is not married, so there is no rule of spouse. So Pinto himself has either been resident in that year or he has spent at least 90 days in that property. Okay. Now he has disposed of the property on 30th April 2022. At that time, he was non-UK resident. Now he has lived in the property from 1st May 2017 to 30th April 2021. Now 30th April 2021 means tax year of 21-22. In 21-22, he became non-resident. But if I just go 1 month back, like on 6th April 2021, it will be tax year of 2021. Till the tax year of 2021, he was UK resident because he had always been UK resident. He left the residency on 21-22. He became non-resident on 21-22. Okay. Despite that, he left on 1st May 21. That's not important. The non-residency years are from 21-22. Okay. You have to look at the year status. You have to look at the year status. So his actual period of occupation, which is of 48 months till 30th April 2021, will not be taking it till 30th April 2021. Rather, we will be taking it till 6th April 2021. Because till 2021, he was UK resident. Okay, from 6th April, his residency status got changed and he became a non-UK resident. However, the last 9-month exemption will always be available. And I'll be solving it, you will be able to understand it in a better manner. Okay, now. So explain by reference to Pinto residency status why the sale of his house in UK on 30th April 2022 will have been subject to UK CGT. So let's comment on that. Pinto sold the UK residential property or the UK house on 30th April 2022, which is tax year of 22-23, in which he was a non-UK resident. This disposal will be subject to UK CGT as it was a residential property disposal and residential properties are subject to UK CGT for new non-UK residents if disposed of after 6th April 2015. Now again, if someone has forgotten the rules, just go to the summary notes, okay? Go to disposal of property for non-UK residents. Maybe you can find it. In the individual overseas issues, you will find this topic, overseas issues. Just a minute. Overseas issues. You will find that topic. Okay, just a second. Individual overseas issues. Yes, here comes your overseas income tax and CGT issues. And here, if you go down, you will find the rules relating to UK CGT rules for non-UK residents. Okay. And when we talk about the disposal of residential property, they are subject to normal CGT if it arises after 6th April 2015. Okay. So it's very important that you remember the rules. So despite that Pinto was non-UK resident at the time of disposal, but it will be subject to normal UK CGT as it was a disposal of residential property and it was done after 6th April 2015. Okay. Now we have to look at the CGT calculation. Let's look at it. Now, chargeable gain on disposal. Now, what was the chargeable gain on disposal? He wrote it. There was an excess of proceeds over cost of 47,000. So, excess of proceeds over cost, in other words, it means for the chargeable gain, 47,000. Let me copy the pound sign. So, 47,000. Okay. This amount was excess of proceeds over cost. Okay, so in other words, excess of proceeds over cost means the gain only. Okay, now we have to deduct the private residence relief from it. Okay, so for that, obviously note 1 will be developed. It will be a detailed working. Now, note 1. Private residence relief will be available on disposal of this UK residential property. Okay. However, period of occupation or exempt periods, however, period of occupation will only be permitted if in the relevant tax year Pinto was UK resident or at least spent 90 days in that property in that particular tax year. Okay, last 9 months exemption will be available on property. Okay, last 9 months exemption is always available. Now just listen to me. Total ownership period, if you evaluation of period of ownership will be, I just want you all to listen to me carefully. Total ownership period was, if you look at it, the total ownership period is from 1st May 2017 to 30th April 2022. 60 months period. Okay, that was given in the question. Total ownership period was 1st May 2017 to 30th April 2022. Actual period of occupation in which he actually lived in property was from 1st May 2017 to it was 30th April 2021, which was 48 months, to 30th April 2021, which was 48 months. It was also written in the question. He has counted the months and told you very much clearly. Okay, now in this actual period of occupation, Pinto was UK resident also in those tax years, except month of April 2021, which lies in tax year of 2021-22, when Pinto was non-UK resident and he also didn't spend 90 days in the property in tax year 2021-22. Why it was so? Because if you go and look at it, in the tax year 21-22, he had only left for maximum 2 weeks in the UK. And then he also let out the property. Also, the property was let out from 1st May 2021 until its sale on 30th April 2022. I'll just say that you just need to listen to me carefully with patience. Believe me, everything will get clear. I'll repeat the things also. Okay. So, exempt period from this actual period of occupation will be from 1st May 2017, when he was UK resident, to 5th April 2021. Okay, and this will be 47 months in total. I have just excluded this 1 month. See, I know that you might be getting confused in it, but I'll just say that listen to me with patience. See, total ownership is from 1st May 17 to 30th April 22. The disposal is on 30th April 22, which is tax year of 22-23. He was a non-resident in that year. He was non-resident for 2 years, 21-22 and 22-23. But since it's a disposal of residential property after 6th April 2015, so it will be subject to normal CGT. Now we are talking about PRR. Okay. Now for PRR, the rule is that you have either been resident in that year for which you are claiming PRR, or you have at least spent 90 days in that property. Now, actual period of occupation was from 1st May 17 to 30th April 21. 30th April 21, only this month of April 21, that lies in tax year of 21-22 when he became non-resident. Before that, he had always been resident in UK. So only that month of April, which lies in tax year of 21-22, Pinto was non-UK resident. And he also didn't spend 90 days in tax year in that property in the tax year 21-22. So the exempt period from this actual period of occupation will be from 1st May to 5th April. Just exclude the remaining month of the April 21 because that lies in a different tax year. Okay, now further, absence period from 1st May 2021, which is written here, 1st May 21 until its sale on 30th April 2022. The absence period from 1st May 21 to 30th April 2022 will only qualify for last 9 months exemption before disposal. Other reliefs of deemed period of occupation will not be available as there was no actual period of occupation after absence period, because he directly disposed of the property on 30th April 22. There was no sandwich. Okay. And further, letting relief will also not be available as property was not occupied by Pinto partially. For letting relief, it's necessary that property should be occupied partially. Okay. So total exempt months are how much? 47 months plus 9 months. So that will be 56 months. Will be 56 months. So what will be our PRR? 47,000 pounds. Or I can calculate here also. PRR will be 47,000 pounds divided by 60 months of ownership multiplied by 56 months. I will repeat the things also, so just listen to me carefully. So the PRR will be 43,867 pounds. So this is my PRR, 43,867 pounds. So what will be my chargeable gain again? 47,000 minus 43867. So that's 3133 pounds. Okay, so we have to calculate the chargeable gain arising. So now the chargeable gain arising will be 3133 pounds. Okay, let me repeat it again. I know that there might be some confusions in your mind. So since it was a requirement of 7 marks and it only referred to the relief of PRR, and you all know that PRR is one of the concepts which we study in basic taxation. So when he's asking it at advanced taxation level, it will require some involvement. I would say that it's slightly difficult if you're not good at PRR. First of all, Pinto sold the UK house on 30th April 22, which is tax year 22-23, in which he was a non-UK resident. This disposal will be subject to UK CGT as it was a residential property disposal, and residential properties are subject to UK CGT for non-UK residents if disposed of after 6th April 2015. Since it will be subject to normal CGT. So the gain was 47,000. Now comes the PRR. See, for PRR is available for non-UK residents, but the rule is that you should be either resident in that year or you have at least spent 90 days in the property. Private residence relief will be available on the disposal of this UK residential property. However, period of occupation, the exempt period, will only be permitted if in relevant tax year Pinto was UK resident or at least spent 90 days in that property in that particular tax year. Last 9-month exemption will always be available. Now, total ownership period is 60 months. That was given in the question, clearly written. Like the examiner was so much clear in this question that he didn't ask the students to count the basic months. Okay, so the total ownership period was 60 months from 1st May 17 when he bought the house and then he disposed it on 30th April 22. So 60 months was the total ownership period. Actual ownership period of occupation from 1st May 17 to 30th April 21, that's 48 months. Now, in this actual period of occupation, Pinto was UK resident also in those tax years, except month of April 21, which lies in tax year 21-22, when Pinto was non-UK resident and he also didn't spend at least 90 days in the property. Okay, so that 1 month will be excluded. Exempt period from this actual period of occupation will be from 1st May to 5th April, and those are 47 months. Further, from the absence of 1st May 21 to 30th April 22, when he let out the house. okay, that he let out the house. So in those 12 months, only last 9-month exemption will be available of before disposal. Other reliefs of deemed period of occupation will not be available as there was no actual period of occupation after absence period, like 36 months due to any reason, those exemptions. Further letting relief will also not be available as property was not occupied by Pinto partially, which is the requirement of letting relief. So total exempt months are 56 months. You calculated the PRR, you posted it here, and that comes your chargeable gain. So we had to calculate the chargeable gain arising, and here comes your chargeable gain. Again, if anyone has forgotten the rules of private residence relief, just write private residence relief, and all of the rules are available here. Last 9 months before disposal date, actual following periods are considered as deemed period if they are supported by APO before and after, all of the rules. For letting relief, the individual must occupy the property himself also. So all of the rules are given. And for the non-UK residents also, these rules are given. Okay, so I hope that you remember these rules, and if you've forgotten any of the rule, just use the summary notes to refer the rules back. Now the last requirement, calculate the Pinto's property income after all taxes in respect of his house in Vicia in the tax year 24-25. So now this is a requirement relating to overseas income. Okay, let's go and read this part, which is Pinto's income for the tax year 24-25, that what incomes he is earning, and then let's calculate his final taxable income and his income after all taxes in relation to his overseas rental income. Okay, let's look at it. Okay, so Pinto's income for the tax year 24-25. Now, I hope you all remember that in 24-25, Pinto will be a UK resident because he will return to UK on 20th December 2023. So in 23-24, he was a non-UK resident, but in 24-25, he'll be living in UK for a complete tax year. Okay, now that's the next tax year when he has already returned to UK. On 6th April 2024, Pinto will incorporate a new company, Fawa Limited. Pinto will take a salary of £10,000 and a dividend of £2,500 from Fawa Limited in the tax year 24-25. So these will be his UK incomes. Pinto's only other source of income in the tax year 24-25 will be a rental income from his house in Vicia. Overseas rental income. Pinto acquired a house in Vicia on 1st June 2022. Pinto will rent out this house from 1st May 2024. In the tax year 24-25, Pinto will receive rental income of £8,375 after allowable expenses but before deduction of Vitian tax. The tax rate in the country of Vicia is the rate of tax on property income is 16%. There is no double tax treaty between UK and Vicia. Now, what we have to do is we have to calculate the Pinto's property income after all taxes in respect of his house in Vicia for the tax year 24-25. So basically what we have to do is that we need overseas Pinto's property income from Vicia, from house in Vicia. So what is that property income which he's provided with? So the property income he's getting is £8,375. Just listen to me carefully. So that's £8,375. Okay. On this, he has to pay Vitian tax. Okay. Because he is asked after all taxes. So the tax rate in Vicia is £8,375 into 16%. Obviously, it's the income in Vicia, so Vitian tax will be applicable on it. Irrespective of it, the rate of tax on property income in Vicia is 16% because it's before deduction of tax. So you need to charge tax on it, which is 16%. 75 into 16%, £1,340. Okay, as rental income is of Vicia. Therefore, Vitian tax of rental income of 16% will be applicable on it. Obviously, Vitian country, the tax department will charge tax on it, and that's £1,340. Now, there will be UK tax also, UK tax on rental income from Vicia. Why there will be UK tax? Okay, as Pinto is UK resident, in tax year 2024-25. Therefore, UK tax will also arise on this overseas income. Okay, so UK tax will be, what will be the UK tax? We need to calculate it, will or is shown in working one. So let's do the working one in relation to it. And then we will get the Pinto's property income after all taxes. So Pinto's property income after all taxes. Let me repeat it again so that if you have any query, it gets cleared. Okay. See, what is happening here is, just a second. Just look at the requirement that what he asked us. Calculate Pinto's property income after all taxes in respect of his house in Vishya for the tax year 24-25. Now, the Pinto's property income was 8375 pounds. If you can look at it after all allowable expenses, it was 8375 pounds. Okay, but before the deduction of Vishian tax. Now, he has stated that after all taxes, since this property is of Vishya, so the Vishian tax is 16% as rental income is of Vishya. Therefore, Vishian tax of rental income of 16% will be applicable on it. That will be 1340 pounds. Now, since Pinto is UK resident in 24-25, he has already returned to UK in 2023 only. In 23-24, he was a non-UK resident as we solved in part A. But in the next year, 24-25, obviously he'll be a UK resident. So there will be UK tax on it, but obviously there will be double taxation relief also. So now we need to do the working of it in relation to UK tax. Okay, UK tax of Pinto will be. Let's look at it. I want you all to listen to me carefully while we do this working. Now, what you need to do is that basically we'll be calculating UK tax with overseas rental income, and one time we'll be calculating UK tax without overseas rental income. So the difference of both of them, just listen to me. We'll be calculating the UK tax with rental income and without rental income. The difference of both of the UK tax will give you the answer that what is the UK tax on it. See, the reason is that when you have to calculate the tax on one particular thing, so you have to look at that, okay, what will be the difference of the two taxes? Okay, just listen to me while I do it. If you have any query, just have some patience. I'll give you clarity on each and everything. Okay, now what Pinto is earning? Pinto is earning a UK salary of £10,000 and dividends of £2,500. And he's earning this overseas rental income of £8,375. Now, so basically, Pinto has two sources of income. One is non-saving and other is dividend. Okay. UK salary, that's £10,000. UK dividends, which is earning, that's £2,500. Overseas rental income, that's £8,375. Obviously, that goes in the head of non-saving. So that gives us his total income. So that's 1,837.5 pounds, and here it's 2,500 pounds. You deduct your personal allowance, that's 1,2570 pounds, and here comes your taxable income. See, I'm just doing some very basic level working. Let me repeat it again also if someone has any query. We have to calculate his property income from his house in Vishya after all taxes. All taxes means the tax of Vishya and tax of UK. Since it's the rental income of Vishya, so obviously Vishian tax will be applicable on it. But since he's a UK resident, so UK tax will also be applicable on it. Okay. So now what we are doing is that UK tax with overseas rental income like his total UK tax. And then we'll calculate his UK tax without overseas rental income. So the incremental tax arising due to rental income, that will be our answer. Now, this is the easiest approach to calculate the incremental tax on anything. Like what's the incremental UK tax on it? Okay. So 18375 minus 12570, here it will be 5805 pounds, and here it will be 2500 pounds. Now the tax will be on 5805 pounds, you will charge 20%. So that will be 1161 pounds. 161 pounds. And for dividend, or the dividend on 2,500 pounds, on 1,000 there will be 0% band. I hope you all remember. And on the remaining you will charge 8.75%. So that will be 131 pounds. So the total UK tax in this case will be 1161 plus 131. So that's 1292 pounds. Okay. Just have some patience. Believe me, I'll repeat each and everything again and things will get very much clear. Okay. See, what we are doing is that we are calculating is UK tax with this overseas income first. Okay. And here is his UK tax with this overseas income. Now, the second thing I'll be doing is that we'll be adding one more table here. Okay, we'll be adding one more table here. And now what we'll be doing is that we will be calculating his UK tax without this overseas rental income. Now there will be UK salary, 10,000 pounds. There will be UK dividends, 2,500 pounds. Now this will be your total income, 10,000, and here it will be 2,500. You will deduct your personal allowance, that's 12570 pounds. 10,000 goes from here. Now, obviously, your total personal allowance is 12570. You will deduct 2,500 from here. So now your taxable income will be 0 and 0. Now just think about it. When your taxable income has fallen to 0, no UK tax, as taxable income is 0. Just have some patience and listen to me. Believe me, I'll repeat each and everything again so it will get very much clear. Okay. So now, in this case, is there is no UK tax as the taxable income is 0. So what I can say is, let me delete these rows first. What I can say is that due to overseas rental income, incremental UK tax created is of 1292 pounds. That's the incremental UK tax. Just use your mind. UK tax with overseas rental income and UK tax without overseas rental income. So this is the incremental UK tax created, and that is of 1292 pounds. However, from this UK tax created, double taxation relief will be available at lower of two things. Lower of what? I will repeat it again also. So just listen to me carefully. UK tax with overseas income. Also UK tax on overseas income. That's 1292 pounds. And the overseas tax which we have paid. So the overseas tax which we have paid is 1340 pounds. Okay. Double taxation relief will be of 1292 pounds, and it will offset entire of the UK tax amount of 1292 pounds. Okay, of 1292 pounds. This means that there will be no UK tax on this overseas income. I know that some of you might have got confused, that certain things have got difficult, but I'll just say that have some patience and listen to me carefully. I'll repeat it again. So 8375 pounds minus 1340 pounds only. So that gives me the final answer, which is 7035 pounds. Let me repeat it again. Calculate the Pinto's income after all taxes in respect of Vishya for the tax year 24-25. Now, Pinto's property income from the house in Vishya, that was 8375 pounds. The Vishian tax, that's clearly available in the question, that the Vishian tax is 16%. So since it's the income earned in Russia, so there will be overseas tax irrespective of UK tax. That will be 16%. UK tax on rental income from Russia. As Pinto is UK resident, so therefore the UK tax will arise on it. Now let's look at the UK tax. Now, how will we identify the UK tax? How will we identify the UK tax? Because we are talking about this rental income only. We are not interested in its total tax. We are talking about this rental income only. So what we have to do is it's UK tax with overseas rental income and without overseas rental income. So we calculated tax one time with overseas rental income. Okay. All the incomes, personal allowance, taxable income, non-saving rate is 20%. In dividend, 1,000 is taxed at 0%. Rest at basic rate band 8.75%. So this was UK tax. And here also, without overseas rental income, when we removed the overseas rental income, what we saw was that his income fell to zero. The entire of the income was covered through personal allowance. So due to overseas rental income, incremental UK tax is created of 1292 pounds. Now you must be thinking, let's go and put it here. What you need to understand is that we have already paid some overseas tax also. Now, irrespective of the double tax treaty, you will get the DTR. The double taxation relief is always available. UK tax is 1292 and overseas tax is 1340 pounds. So double taxation relief will be of 1292 pounds and it will offset entire of the UK tax. The DTR is given by UK. So this means that there will be no UK tax, and if there is no UK tax, then automatically UK tax on rental income will be zero, and the Pinto's property income after all taxes will be 7035 pounds. Okay, let's go and revise the entire question again. I know that this question was slightly difficult as compared to the first two. But if in an entire exam paper, there are some difficult requirements, because if you remember, the question one and two were very easy ones. If there is one question which is a bit difficult at advanced taxation level, it's an acceptable thing. Let's look at it. So if we look at this entire question, the first requirement was relating to residence determination, that if automatic tests are not applicable, how will you determine the residence status? We looked at the UK ties, the table through which we look at the ties and the number of days. We evaluated all of the UK ties, and then we determined that in the tax year 23-24, he was not a UK resident. But obviously, using this tax table, looking at the column of previously resident, since he was resident in any of the previous three tax year, so we looked at it carefully, and then the ties. Then other thing was relating to PRR. That was also a bit difficult one, because when we talk about PRR for non-UK residents, that's a bit, I would say, tricky, that a student has to evaluate also that if a person is like non-UK resident or even spend 90 days in the property, so will not be getting the exemption period of PRR. So we looked at that, we did those calculations. And then in this question, after all taxes for the overseas income was 8375, we deducted the overseas tax. Now we talked about the UK tax. Now for UK tax, it was a difficult one. The reason here was that in one case, the entire income was getting covered through personal allowance, and in other case, there was tax situation. And the most important thing here was that in this question, the dividend income was also involved. Normally, in the DTR question, he only focuses on non-saving. Now, the easiest approach whenever you get stuck in DTR is to calculate the tax two times, one with overseas income and one without overseas income. That's the easiest approach. That will give you the difference approach. The UK tax with overseas income and without overseas income. Okay. So without overseas income, the entire of the income was covered through the personal allowance only. So there was no tax arising in that situation. Okay. No tax was arising in that situation. But with overseas income, there was a tax of 1292. So we said that due to overseas rental income, incremental UK tax, this is the UK tax, was of 1292 pounds. However, it was covered by double taxation relief, DTR. So there was no UK tax, but overseas tax is paid irrespective. The overseas country do not provide DTR. The DTR is of UK only. So Pinto's property income after all taxes is 7035 pounds. Now if you look at this entire paper of December 23, this first question, which was J, I believe that it was a very easy one. Then other question was this Rabo Limited, which was also very easy. But when we talk about this question number 3, Pinto, it was a bit technical one. But still, I always say that this was just the first paper of your past paper revision session series. As you do more and more papers, you'll get more control and more better understanding. Okay. Now, this is a series of five complete attempt papers. This was just the first paper of that series. Okay. This paper, I'm making it available for everyone. I've uploaded it on my YouTube also. But the remaining four papers are for my students only, and they will be uploaded on the learning management system only. So if someone want to get access of the remaining four papers, they have to contact me on my WhatsApp number. Okay. I've already shared my WhatsApp number, that this is my WhatsApp number. You can always contact with me. Okay, for the summary notes or for these further past paper revision sessions. Okay, so now we are done with the first paper, that is of December 23. In the next class, we'll be starting with the next paper and so on. If you have any query, feel free to contact me on my WhatsApp number. Thank you, everyone.